first one on our list is AU Small Finance Bank as well as IndusInd Bank. Now, both of these stocks are in focus on the back of fresh brokerage updates that have come through. Abhishek is here with the details. Abhishek, take it away.
Well, to begin with, the AU Small Finance Bank, the stock is up more than 8% in this week alone. There was a conference where of Citi wherein, they did mention that they'll apply for universal banking license in September and no excess incremental cost except the name change and brand building. This was earlier guided to be by August in the analyst call that they had after their results. However, just a 1 month transfer over here. They have retained the credit cost guidance at 110 to 120 basis point for FY25, despite the fact that you are seeing stress building up in the MFI as well as the unsecured loan for the industry as a whole. They are confident that they can double their loan book in the next 3 years, and the net interest margin has been guided for 5.7% to 5.8%. In FY25, they had recorded 6% in Q1 of FY25. So, 2Q MFI behavior is similar to first quarter, and they have guided for ROAs of 1.6 to 1.8% for FY25. Remember that a few days ago, large block took place in AU Small Finance Bank, wherein FinCare Business Services, they sold about 1.72% stake at consideration of 630 per share. So the deal size was about 800 crore. The biggest buyer in that block was DSP Mutual Fund, who bought about 1.39% stake in the company. Now, FinCare Business Services is the promoter entity of FinCare Small Finance Bank, which was merged with AU Small Finance Bank. On the other hand, IndusInd Bank, Motilal Oswal note is there, wherein they mentioned that the board is likely to submit Mr. Sumant Katpalia's name to the RBI by early of next month, that is September, seeking a fresh 3-year term for the current MD and CEO of the bank. So the recent approval for setting up a wholly owned subsidiary, that is AMC, reinforces confidence in the bank by the regulator and keeps IndusInd Bank hopeful that Sumant Katpalia might get a 3-year term approval from RBI. So further, no penalties have been imposed on the bank by RBI so far, and management is also expecting an approval for the stockbroking arm within the next 3 to 4 months. If you take a look under Mr. Sumant Katpalia's term from Q4 of FY20 to Q1 of FY25, the deposits have grown by 4% on a CQGR. This is for cumulative quarterly growth rate that you have seen, and advances have grown by 3% on a CQGR basis. Current term of Sumant Katpalia will end in March 2025. Market share is the key highlight, which under his tenure has increased. Deposits market share has moved from 1.49% in FY20 or Q4 of FY20 to about 1.88%, and advances, their market share has improved from 1.99% to 2.12% X of SDFC Limited for the industry. That is what I have taken into calculation. In terms of key ratios, gross NPA ratio is down by 43 basis points under his tenure so far. Net NPA ratio down by 31 basis points under his tenure. Net interest margin has remained flat. However, return ratios have improved drastically. So ROA has increased to 1.7% on a quarterly basis from 0.4% that was there in Q4 FY20, and ROE has improved to 13.5% from a lower single digit that was there in Q4 FY20. And the best part in the balance sheet is the reduction in risk. So risk weight asset to advances ratio, that's declined from 125% when he took over to right now about